This is a deep dive look into a recent article that you just wrote, Katherine, which was talking about the underperforming condos in Miami. That article was off the back of a report that I wrote about that subject.
I looked at the report and I think what stood out to me was that certain buildings popped up.
Joining us is Katherine Kallergis, a veteran journalist at The Real Deal, where she's been reporting for over a decade. Known for her hard-hitting and sometimes controversial coverage, Katherine has shaped the conversation around South Florida real estate with deep dives into the condo market, from chronicling Miami's sinking buildings to covering the tragic Champlain Towers collapse. She's one of the foremost experts on the issues reshaping how we live and build in South Florida.
My responsibility is to provide the critical information that the market needs.
Get ready for an eye-opening conversation on Miami's underperforming condos, the data behind the market, and the stories that reveal the truth about how buildings really perform. This is Better Decisions.
Welcome back to another Better Decisions podcast. I'm David Siddons, and I'm here today with Katherine Kallergis from The Real Deal. This is a deep dive look into a recent article that you just wrote, Katherine, which was talking about the underperforming condos in Miami. And that article was off the back of a report that I wrote about that subject. So let's kind of dive in. I'd like to start off this podcast this time just to state that as those people who watch the podcast, we thank you for tuning in and watching this. We hope that this information that we give you is truly quantifiable and actionable. These are the two rules I have within my business. Better Decisions is the title of the podcast. It's also the title of our business. It's our strapline. It's our ethos. It's our mission statement, if you want to call it that. And for a very long time, and I've done this for nearly 20 years, I felt like it's important to be honest. It's important to be direct. I don't write things or report things to vilify anyone or to sort of try to make enemies or just try to make clickbait. I actually really try to put stuff out there that people can use. So I just want to do that as a caveat. Ultimately, this is a report that we detail that not all condos are created equally. Some break records, some stall on price, some are great for a time and then they drop off. But we hope that within this report, we designed it so people could start to see some of the patterns. And Katherine, your article really brought it to light. Take us through what that article was really about for those that don't know, that can play catch up to our dialogue today.
So I get your emails. Good job.
Thank you.
And I believe the title was something like the worst condo buildings in Miami. Like, these are the worst.
Yeah, it was actually, the video was titled How to Lose $1 Million in the Condo Market. And then I worked off the back of that to work backwards to one of the points was about, there was actually about 10 points, but one of the points was about what we classified as buildings that were selling at $1 per square foot that had dropped off from last year's numbers.
Right.
And it's not, this is math. It's just math. It's 1 + 1 = 2.
Mm-hmm.
So that was it.
Right. So I read your email, I looked at the blog post, and then I immediately forwarded it to my editor because I was like, this is the kind of story that I knew would get a lot of attention. And we don't get that from realtors very often.
I was going to say, did that surprise you? Did it surprise you that a realtor would write that?
Yeah, especially somebody like you have a good reputation. So I was surprised. So I sent it to my editor and we decided that I would do a story based off the report. I looked at the report and I think what stood out to me was that certain buildings popped up.
Mm-hmm.
So, we've heard a lot about Aston Martin residences. It took a long time to get built. A lot of units were on the market. I've been hearing that from agents. So I thought, well, that makes sense. Just, from a first glance. And then you also had Icon Brickell on there. And Icon Brickell has had a lot of issues. They've had lawsuits. Their pool deck was shut down for years. I know people who've lived there. So it made sense to you. It fit the vibes we're checking out. Mm-hmm. And you had an older building, which also made sense just given what's been going on with the aging condo market. And then you had some other ones that I was just interested in diving into. So you had Porsche Design Tower, you had, I think, Regalia, which, I've covered for years because of the penthouse. So it's just all of these things where this makes sense. I'm going to dive into it. I'll reach out to David, work on a story.
Yeah.
So that's kind of how it's
And I certainly wasn't, I wasn't out to like target. And again, to be clear, sometimes people think, is David trying to start to pick a fight?
right.
Is he trying to create clickbait just to get people to kind of like engage, to make something salacious and juicy? And the truth was, I really wasn't trying to pick a fight with developers. In fact, I generally do the opposite. I'm usually trying to say, look, I want to find the positives in things. But at the same time, I think that one of the biggest issues that we see is there's a lot of sycophantic behavior in my business. And there's a lot of realtors who will go out there and say, well, this is amazing and that's amazing and this is great. And I don't really care what you buy as long as you buy with me and I make a commission. And I felt like I've reached this stage in my career where I don't want to keep just selling for selling. I don't need to keep selling for selling's sake. I have a great team. We do a great book of business. Thank you for the compliment. I feel like I have a good reputation in there because I'm very honest with the people out who come to me. I understand that sometimes these, again, I didn't want to, I did not go out there, and I'm not saying, to be clear, I'm not going out there and saying Aston Martin is a bad building, Porsche is a bad building, Icon is a bad building. I think that it's all respective to dollar per square foot. And I think that all I was doing was reflecting on what the numbers were saying.
Right.
And we can dive into like what that means when we see $1 per square foot go down. And I know that's part of it.
Yeah. And also like there could be value for a buyer, right? Because maybe the seller is.
Absolutely. If there's a point where the building becomes, essentially a bargain because it's selling much below the rest of the market, then absolutely it could actually warrant attention because now it's cheap.
Mm-hmm.
It's now a deal.
Right.
So it doesn't necessarily mean that like you take everything in that list and say, just don't buy it. Yeah. And also within that list, I think it's important to say that, I know that the general public and my consuming public and your consuming public can only digest so much information. Mm-hmm. So I didn't want to go too heavy too soon with too much info. I do believe that a lot of the conversations that we have with condos it's not neighborhood by neighborhood. It's not even building by building. It's actually line by line.
Right.
There's some great lines in some buildings. There's also some terrible lines. And there's a reason why some lines will sell really, really well.
Mm-hmm.
Like there are building lines like the Ritz-Carlton in Sunny Isles. The O5 line has a great view to the south. It sells incredibly well.
Right.
The O2 at 87 Park sells incredibly well. Views at Continuum looking south, not obstructed, sell very well. Park Grove A line, it's like the billionaires line.
Yeah.
Right? You can't touch that line. No one can buy into that line because it can't be replaced. Mm-hmm. And so at the same time, there are other places where, when you design a building, some floor plans and you're going to end up with some space that's a bit funky and you're going to try to put something in there and it's not always ideal.
Yeah. Yeah, definitely. When you put that together, what did you expect?
When I started doing it, it didn't. If you're asking, did it come as a surprise to me, or did I expect? I didn't. It didn't really surprise me, mm-hmm. And the reason it didn't really surprise me is so I have kind of a formula that I've developed over the years for success and failure with buildings, and I think a lot of it's really common sense. And I think that, like with everything in this world, if you break certain rules, you're going to suffer consequences. So if you go out into the stock market and you put all your money in a stock that's a high-risk stock, there's a good chance you could lose it all. Mm-hmm. If you balance your portfolio and you hedge your bets and you you spread your risk, and at the same time you spread your portfolio with things that can one market can short another market, then you're going to be okay. I think condos are very much the same. I think a lot of the stuff that gets promoted is very much like how to make a home run.
Right.
And I think one of the biggest problems with that is that if you actually look at markets and how markets are played, and again, as the economist, I'm always just looking at the numbers. If you avoid the downsides or the negatives, you don't have to hit the home runs on the upsides, but if you avoid the downsides, you're going to be okay.
Right.
And I think I'd rather do that because making a prediction to turn to someone saying this building's going to go up 40% in value over the next 3 years, no one can really do that. But now I do think I've discovered, and again with AI and we're developing an app right now, a tool right now, where we're able to, I think we're getting close to be able to predict within a 10% accuracy whether a building's going to go up or down in value next year. And we're developing that right now. And I think that if you use the right metrics, you can kind of see the writing on the wall. And that's really what I wanted to dive into. And then I wanted to look at the buildings. And then I think it's down to the reader to look at those buildings and think about the correlations that exist between them. What are the commonalities that have made them underperform this year? And that was something that I hope people would then take that next step. And maybe those watching this might want to DM and say, how does that play out?
Yeah. And I think too, like, you use data. I spoke with your researcher. We went through some of his buildings. So I was looking at what was used for the report, and I could tell that there was something behind it. Like, that's, I said vibes, but the vibes checked out, so.
And what was, just so we know, we go through actually what was underpinning the underperformance? What are the indexes that we were looking at? Just going to take through some of those examples so people know, like, what data were we paying attention to?
So I think it was days on market, which was cumulative, not like from the most recent.
Yeah, that's a bit of a
huge one.
That's a huge one.
Yeah.
I'm glad you saw that, because people do that all the time. They hit the reset button. Yeah. It's that classic 6 months, take it off the market. I do it myself. I won't even lie. If I get a listing and it's not going great, most of my stuff, I do sell it very successfully. We try to price it right. But if something's happened, we will put it off the market, reintroduce it, and stick it at the top of Zillow and Trulia again. And then obviously it resets the days on the market.
And then price per foot, historical trends.
Yeah, it's a big one.
Yeah. What else?
Yeah, so there was the percentage discounts. We looked at how much is being discounted from, and again, it's important to look that it's the original ask to the current discount, because if I reset the market, and again, often when we reset the price lower, now if you sell within 3% of that, 2% of that, it's like, it got within 2% of asking price. Well, after it was dropped several times, that has to be factored in. So the discounts, the amount of inventory that was available for the building. And I guess that was a bit more, I guess there was a comment made on that was a little bit more controversial, if you want to say it that. They were like, well, that doesn't mean anything. And you can go into, I won't say who made that comment, but the comment was, well, all new buildings have a lot of inventory when they come back into the market for the first time.
Right.
But not if they're selling for $1 per square foot, far, far lower than what the people originally paid for the unit. That's what I was like. Yes, stays on the cumulative inventory, but it's what it's selling at. If you get 30% of the building, 40%, 50% of the building comes up for sale, but it all sells at like a massive premium over what they paid, then it's not really underperforming. It's actually doing really, really well and making money. So that was another thing. And then we looked at like the carry costs, the HOA fees. And that goes into like the older buildings, because that's when, the money in, money out conversation starts to get interesting. And HOAs, I know, have been a big topic in your dialogue. You've had a lot of articles that have come out about HOAs and what's happening with that.
I think too, with the newer buildings, like I'm starting to ask developers and sales teams about this. Like, do you know what the price per foot is going to be for the monthly maintenance? Because I think people don't think about that as much. Maybe they do.
I think they do now.
Yeah.
I hope they do now. I really hope they do. Yeah. I think that the dollar per square foot, the square footage, and I'm seeing New Yorkers. I just had a couple right now actually buy a unit with me. We did a deal yesterday, and they were looking at the taxes, and they were looking at the HOA fees, and they were like, well, this is a big nut. This is a lot of carry on this. But they knew what they were getting into. They knew their HOA fees were where they were, and they think they really stabilized in that building. But it's when HOAs destabilize.
And the developer turnover.
Yeah, that's a big one. We can get into the developer turnover, because that was something. So I know the answer, but I kind of want rhetorical questioning here. So how do you see what do you mean by the HOA turnover? I know the answer to this question, but I want you guys to listen to this.
So once the developer sells, more than 50%? What is it? Do you know what it is?
I don't know, actually.
It's a percentage of units, and has turned it over, right, to the
homeowners association.
Right.
So there's now a new president, and there's a board, and they're in charge of the bank.
Mm-hmm. They're in charge of the bank. And I think normally, and you can correct me if I'm wrong, the fees end up going up.
You said it. I didn't say it. She said it. This is why I always tread that careful ground, because I always don't want to let people be like, you said this, and this is a very difficult subject. When I wrote this article, I thought to myself, is someone going to try to take a pop at me? And I was like, okay, let me look legally here. Am I on safe ground? Right? I just stated facts. I didn't say it was good or bad. I didn't say I love the floor plan, or I didn't say I thought that your kitchen was shit. Pardon my language. I didn't say that, because that's not
Right.
that's an opinion. I keep my opinions to myself. I just wanted to state the facts of the numbers. So yeah, so you said it, not me. The HOA fees, when they get turned over,
Right.
the HOAs initially are an estimation,
Mm-hmm.
and I think it's clear to say it's an estimation. Now some developers get it bang on, like they're really good. They pad in. There's a reserve now. The laws have changed so that you have to have a 10% reserve accruing every year, so that you've got money in the pot, so a Chaplin Tower collapse doesn't happen again, so that you always have enough money to pay for the repairs and renovations, and you don't end up with a board who wants to kick the can down the street, so to speak, and not pay for things that
Right.
need to be fixed. So you have to have that reserve, but they're estimating the costs. Now, one of the things that changes year on year, and you've covered this story as well, is insurance. And once the insurance premiums go up, then of course it's a very large percentage of the HOA fees are covered by the insurance premium. And so if that goes up, your fees are going to go up. So if you're estimating 2 years, 3 years ahead, you always have to be cognizant that could change.
Yep.
But that's systematic. That's not like that building changes and nothing else changes. That
Right.
systematically changes.
Yeah, it's across the board.
So it's across the board. It's like dealing with inflation. It's like, well, just accept it because everything else is more expensive. So respectively, it's still, at the same comparable level to everything else. But when fees go up, one of the things that I thought happened, and I might be wrong on this, was that I felt like sometimes the carrier was being subsidized just to keep things running.
Right.
But then when they step back, that fee goes up. Now, I feel that there's a number, and I'm not going to say what that number is on camera, but I think there's a number that buildings, a minimum that they can spend to run that building. I think now if I look at any modern building, any new building, obviously if it's boutique, you've got fewer units and
Right.
more cost to spread over the fewer people there if it has like all the nice amenities. Bigger buildings, it suffers a little bit better. But suffice it to say, I think that there's a number that you have to get to in order to be realistic. And if you're below that number, I'm going to cry bullshit.
Yeah.
I'm just going to call it.
Yeah.
I'm not going to do it like out online. I'm not going to write it I'm not going to write it in an article so you can report it on The Real Deal. I'll just tell people on the phone. But I think that that's something that I think there's a lot of misdirection that goes on
Yeah.
within the industry that kind of gets me a little
Yeah.
tweaked and a little aggravated sometimes.
Well, and there's so many buildings that are in the pre-construction or construction phase. Like I think it's it has to be kind of overwhelming for buyers who have maybe never done something like this before. I would think so, because how do you know which one is the right one to pick?
Well, that's the thing. I think
Yeah.
one of the hardest things that we have is we have so many condos in Miami. I mean, I've done a number of podcasts with Craig Studnicki, who's a really great guy, knows his stuff. I've done a lot with Anna Bozovic, who you've quoted as well, who really knows her numbers too. She's like a walking calculator. That woman is incredible. We've talked, and as we go through like each cycle, and again, I've been doing this for nearly 20 years, so I've seen cycles. I've seen 2008, I've seen 2015, I've seen 2019, and now I'm seeing the 2025 and this new cycle and all these new things happening.
Right.
Which, there's a lot of product. It's very confusing. Absolutely no doubt confusing. You've got old, you've got new, you've got stuff in the middle. It's a lot to process. So I just hope that I can just give some direction, some rules to the game to help people do that. Which kind of brought me to like, in the end, let's talk about like what that data actually really says. Because I felt like it was maybe a good idea to suggest. So from the report, what did you take from it? Like when I wrote that article and then you reported on it, what did it say to you? What did you take from that you thought, oh, okay?
I think, well, for me, I was kind of reminded of the we used to look at buildings after they were completed and do these kinds of analyses.
Mhm.
And I think it's good to kind of do that like postmortem, honestly, that looks at, because we report on the sellout, we report on the financing.
I like the word post-mortem because it does feel like I just dissected a dead body.
Well, because the developer, the developer doesn't have to stick around. I mean, they can, and they usually don't. They sell out the building and they want to move on to the next thing. And then we move on because there's so much construction. So I think it's important to kind of like look at like the marketing. I mean, the marketing can be so strong for a building that maybe at the end of the day is, has these factors that show that it's underperforming. And we just, like you said earlier before we started, like 8 minutes later, somebody in Miami's on to the next piece of news. You know what I mean? It's like...
And then it's forgotten, and all the atrocities and the bad behavior seems to be like, it's a whole new term. The kids are back, and that bad kid at the back who kept like flicking, boogers at the girl in front, he's back doing it again, but everyone's forgotten because, some other stuff's gone on.
I reported on a building a few years ago in downtown Miami. I'm not going to say which building, but it was completed, short-term rental condo, had a brand attached to it.
I know the one. I know straight away. As soon as you said that, I was like, I know which one.
They had some issues, I think, with the city. The permitting, I think it was delivered. It should have been, it should have allowed for daily rentals, and they were only able to rent out. The owners were only able to rent out the units for a month, and I think it probably changed, probably got fixed. I have to check, but I remember speaking to foreign investors because they were not able to rent their units out. They closed on the unit. They couldn't rent them out on a daily basis. They were losing money because they had these projections in mind, and they were going to have to sell because they just couldn't handle it. They couldn't, and it's like that.
And everyone and it was like they were forgotten about.
Right, exactly. Yeah. So I think, and there's so much inventory of that kind of product in that area. That's the kind of thing that I think is important to look at because, we also talked about this. What is being promise, what is being shown in the renderings, what is versus what actually gets delivered. Sometimes it's totally different,
Yeah, I think that there are patterns of behavior that we definitely see, and I feel like those patterns sometimes get forgotten. If you just go back, one of my favorite sayings was, history doesn't repeat itself, but it definitely rhymes.
Right.
And I think that when you look at these, this is why we created this kind of how do we figure out what's bad and what's good? What's the rules of the game and what's the formula? Because if the formula is repeated, the history will probably repeat itself. Right. It's just like if I behave in a certain way and then I go and do it again, it's very likely that the result will be the same. I mean, that's just logical. I'm not talking about anything in particular. I'm not talking about developers. I'm not talking about buildings. I'm just talking about human behavior.
Right.
And I think that sometimes if we forget, which we shouldn't, what's gone on in the past, and I think those agents who've actually been selling this for long enough know the history. They know the history books of these condos. They know the patterns. They saw what actually happened. It's one of the reasons why when I developed Condo Geeks, which actually tracks the performance of all the condos year on year on year through Miami, I got to see these patterns of behavior, and I got to see them happen again and again and again. And then when a new cycle of condos would be built, someone would tell me, oh, this happened. And I'm like, quelle surprise.
Right.
That happened 8 years ago. Same developer, different building, but the formula was the same. Right. So I tend to get to that point where I'm like, okay, so how do I address this in a way that people can start to understand without getting without people taking pot shots at me? And so that's why, underpinning all of this, we came into this, what was the data really saying? And you obviously, just mentioned that you saw this, forgetful behavior,
right,
that we saw in there.
And it was what was cool about your report is that you kind of covered different types of buildings, different price points, different locations in a way that I think really captured what is going on. There was, I think Fiona House was on the list.
Yeah, I don't dislike Fiona. Actually, as it goes, I actually like Fiona House as a building. There are certain lines I think are just absolutely amazing in that building. But I felt I had to cover it because it's what the number said.
Right.
I'm not going to fudge it. I'm not going to be like, well, I actually like this building, so I'm going to leave it off the list. I'm sorry, it hit the list because particular units that had sold had underperformed.
Right.
And
I mean, that was 10, 11 years ago when that building was delivered. Mm-hmm. There was so much hype around it. There were so many billionaires in that building. And then there was a lawsuit. I don't know if you remember that.
I feel like there's a lot of lawsuits with buildings. I feel like almost you're not a developer unless someone's tried to sue you.
Yeah.
Like it knows the territory.
I mean, for sure, yeah. And then, the surf club did so well. I think it kind of shows you, like, who are the real winners. We also talked about that, like, framing it as the winners and losers. But I don't know if everybody expected it to do that well, but it set, it was a huge...
Surfside's done incredibly well. And I was trying to reflect on that. And part of the formula, which I kind of get into, is that, certain buildings, I think from what I took from the data, was I think investor-heavy deliveries don't do so well. Anything that's a very investor-heavy driven product where people rush in to invest, ultimately they rush in, they rush out again. And at the same time, investors, if they can't rush out, they tend to rent the product. And if the rental market isn't doing particularly well, or in some cases, you've delivered so many units that you saturate your rental market overnight, you end up with a situation where the initial price that you want to get doesn't happen, and it kind of cascades down. Now, whether it's much above what you actually paid is another thing. If you paid 3 and you put it on the market for 8, but you don't get 8, but you get 6, you're still winning.
Right.
But I think in some cases you've got to kind of look, and then understandably over time, I think there's product that's just very generic. Generic product gets hammered. It just does. It's just the laws of the facts. Like, go out onto the street and pick any random car that's mass produced, and I guarantee the depreciation on it's going to be significant. Like, most cars depreciate, but some will go immediately, and some will go more than others. The ones that are really rare, if there's like a Ferrari that they built and there's only one in the world, guess what? That's not losing value. It's just, that's the laws of supply and demand.
Mm-hmm. Yeah.
And then on top of that, we looked at, we'll get into it in a bit, but branded, which I did a podcast on that yesterday. Brands are a funny thing. I won't say more than that right now, but brands are a funny thing. And we have sometimes I have a love and hate affair with brands. Sometimes I mean, it's great. And other times I'm like, I don't get it. I don't get it.
Yeah.
Yeah. So why did you feel like doing an article on underperforming at all was it just part of your MO? And we talked about like good news versus bad news. Do you feel like your job is to outweigh or to report on the negative more than the positive? Is that part of it?
I mean, I think that the negative gets more attention. Like, I think people remember the negative stories more than they remember the positive stories.
Yeah.
And there has been so much positive, like with the market post-COVID, like with the condo boom, the projects that were selling out. So I think it was just kind of it's important to be balanced and to just report on both sides of what's going on. But also, if you were reading checking a news site out, and it's like, these are the best performing condo buildings, these are the worst performing, which one are you going to click on first?
Well, somebody asked me this question. I've got a very good friend of mine who works for a big fund, and their fund is up like 27% this year. It defies the market. And the philosophy of the owner of that company, I'd love to get him on the podcast actually, is not to try to hit the home runs and try to find that like crazy GameStop stock that you can buy in for $1 and sell at like 100 and just time it perfectly, because timing the market's crazy. And I think 91% of fund managers actually underperform. They don't perform as well against just the normal market. So you would have been just better off sticking your money in an ETF, not getting 8% rather than paying a guy 1.5 to manage your money. I felt like what he does is he avoids the big downturns. When you see a big problem coming, is stepping aside from it. And I think that's more valuable. I mean, I use this analogy, if you were to go out into the office right now, and I say this to clients all the time, if you were to go out there into the office right now and I told you there's $1 million hidden in this office, you'd be like, great. But if I said to you, Katherine, there's 10 landmines that I've strategically located in the office under the carpet.
Right.
If you step on one, it's going to blow your legs off.
Right.
You're probably going to die, but it's definitely going to make you, lose your legs. Which piece of information would you like first? If you said money, I'm like, you need to have serious problems. you don't value your legs that much, do you?
No, the landmines, yeah.
Yeah. And I think human nature is that we seek to protect ourselves more. And I think psychologically, a win is nice.
Yeah.
But a hurt is 3 times more impactful.
Well, and my responsibility is to provide the critical information that the market needs. And if you want the positive information, it's very easy to find that. Like every single realtor is going to have that on their website, the Instagram account, you know what I mean? So when we can report responsibly on the weaknesses and the challenges and all that, that's why you need news. Otherwise, you could get it from anybody. You know?
Well, I mean, this gets into the whole thing of news now. One of the biggest problems that we have is that we have so much information coming out right now. And one of the things that I see, obviously with the ChatGPT, with OpenAI, with the ability to, you've got Midjourney doing visuals, you've got Google Nano Banana, and even more something to do with Nano Banana. Coming out, and all these, there's so many these incredible tools that are able to produce visual content and written content and video content. So I'm talking about images that look like photos, but they're not photos. Videos that look like real things are happening, but they're not. It's a movie. It's fictitious. It's created.
Right.
And written. And these aren't Hollywood producers with professional script writers. This is just the average person on the street. And they can put this information out online without any, you're regulated. The newspapers are regulated. Yeah. Who regulates the press?
Well, nobody regulates the press, but we
But you have to. But there's a consequence.
Right.
There's a consequence. Newspapers can get sued, and I know there's certain things to do. But individuals, if Joe Schmo living in his mum's basement puts something out, who's going to sue him? What, they're going to sue him for what, his slippers?
Right.
It just doesn't happen, and there's so much of it. And also, you don't know where it's coming from. They're able to dark web stuff. I'm not trying to sensationalize it, but there's so much to go through. And then there's a point where you're like, how do you disseminate fact from fiction? And this will lead into the conversation that we can have into the other types of product out there. I put on my notes here, the reporter's lens. This is which buildings, for example, I mean, again, this is probably not going to win me a lot of friends because I'm asking you this question. I'm not answering this question. You are. What buildings have drawn what you consider to be sustained negative press or buyer complaints? Did I miss anything in my report?
I don't know that you missed anything. And I think also, I don't know that did you look at every single building? I don't think you did.
I honestly feel like you could give me a name of any building and I'll know something about it. You can give me any name of a building and I'll give you some kind of fact about the building or some kind of direct statistic.
Yeah.
I mean, my team always laugh at me that I'm some kind of weird Rain Man, and I sit there and I'm just
yeah.
Ask David what the dollar per square foot is on ChatGPT, and I'll be like, the last sale was at this number, 1,500 square foot, but it was a 13, but then the penthouse sold at 17, and they're like, oh, cool, thanks.
Yeah. Yeah, there are definitely buildings I think you missed. I don't know that I'm going to say them on this podcast, but okay. I will say there's areas, neighborhoods, there's a lot happening in Edgewater. I think there have been some lawsuits over alleged construction defects in some buildings there, where what was promised wasn't what was delivered, allegedly. That would be one place where I would look a little more closely. I think also there's more in Sunny Isles. I don't know if you agree with that. Is it a building thing or is it a neighborhood thing? What do you think?
So I think it's a bit of column A and a bit of column B, to be honest with you. I think the buildings make up the neighborhood. It's why is this classroom behaving badly? Is it this one kid? No, there's 4 or 5 of them and they're all mucking about and they're all feeding each other. I think that there are neighborhoods that systematically struggle. Sunny Isles struggles more than other neighborhoods this year because the type of people who buy in that neighborhood, there was a lot of foreign money that had bought into Sunny Isles, and those currencies in those countries suffered, and so the buying power suffered. And at the same time, a lot of these were second and third homes. And as a result of that, if you compare that to, say, Coconut Grove, which is really primary driven, we sell a lot of the product in Coconut Grove isn't bought by investors. It's bought by people who are downsizing from a home to live in a condo.
Right.
And because geographically there's not a lot of zoning availability or optionality, there's only a certain number of buildings that can actually go into Coconut Grove. 90% of the market's probably houses, and maybe 10% is condos. So it's just far more robust. And when the markets suffer a little bit, and let's say, you get a struggle where people's purses get a little tighter and they need access to liquidity more, and they just say, well, I don't need my third condo that I have in this neighborhood. Let's sell it because I'd rather use the cash somewhere else. It suffers. And I think that happens. And I think also there are neighborhoods where you have a high saturation of older buildings. You go up the beach and you see a lot of these older buildings, and that creates, downward force. And then there's also areas where, obviously I've talked about upward force of areas like Coconut Grove, and you see strength in Coral Gables, and you see pockets. And there are pockets. There's pockets within neighborhoods. There's, like South of Fifth has very insulated pockets. Like if you look at Apogee and Continuum, they never seem to do badly. They never hurt. Or Murano Portofino, they always seem to even when things aren't great, they do okay. And then there are other pockets where stuff's like, that's not going to go so well. And I look at like markets that are affected heavily by the rental markets, rental rates, Brickell, downtown, and the whole urban core is kind of affected quite heavily by the rental market. But again, we see shifts. But I do think that there are systematic challenges that will create pressure on condos. And although we listed a number, I didn't list every one of them. There are similar buildings to the ones I named that are also suffering this year. So that's not me saying that building's doing badly, but everything around it's amazing. There were definitely forces that were negatively affecting that entire market. And when the market turns and upswings, those buildings could actually go back up again, as long as they're fundamentally good buildings. Mm-hmm. They were just maybe a victim of circumstance. Other times, and I've said it before, I think there are times when if a building gets cast as a bad building, it has a really hard time
getting out of that because it gets kind of into that negative psychology with the buyers and the crowd of people that end up buying in there. It's maybe not, it's never going to, like, you can do the nicest paint job on a Ford Focus. You can put on the best body kit in the world, but no one's ever going to pay you a Ferrari price for it. Lipstick on a pig.
Yeah. So, for sure.
Yeah, I think you should do a deep dive, though, on, like, greater downtown Miami.
I was going to ask you where you think I should start poking around next. That was one of my questions. Like, where would you like David to get into trouble on his next podcast?
I mean, like you said, at the urban core, Brickell, downtown, Edgewater. I think I don't mean to pick on Edgewater, but I think it's lacking the walkability that a lot of these other neighborhoods have. And then you have the issues that are, the flooding is horrible. I was there 2 days ago.
Yeah, let's talk. It's been raining a lot. The last week it's been nuts. It's just like 2:00 comes and it's just downpours. Flooding, which goes with insurance, which goes with issues, all these other things going on. And it even gets into the HOA issue of buildings kind of like getting affected because repairs need to be made, because if you water clog an area long enough, it's going to have some corrosive attributes. What are you seeing now? Like what in that area of flooding is becoming conversational?
If you are online, like, you can see I was there, like I said, I was there 2 days ago. I had a Lyft pick me up. They had to drive onto the sidewalk to get me. I was like 2 buildings away from the bay. Had I waited half an hour more, I would have been stuck. People, like, if these are end users buying these units, to me, I think that is like a real concern because you can't move around. And I think part of it is like the shift from the investor to the end user buyer, the domestic buyer. We have more of that. They're paying more attention to these things. They want to, like, try out these neighborhoods first. I just think there's more scrutiny around, like, that kind of thing.
Yeah, well, when I think about, like you said, getting around, you were trying to get through water, and of course, as soon as water comes, the traffic seems to grind to a halt, and I feel that's partly to do with the water, partly to do with that we have more cars on the road, and we have more cars on the road because we have more buildings, we have more people. So getting into this process of, like, traffic flows, have you started to cover that? Because I didn't say it in the report, but I think that infrastructural forces are definitely part of the play for condo success or failure.
Yeah, definitely. I'm asking people about it. It's interesting because, like, we also cover, obviously, single family homes.
Yeah.
So I think there's been a lot more, I'm hearing about more activity and price growth, like, in the, like, Pinecrest, Gables, like, where you're sitting in a car for over an hour to get to work or whatever it is.
Yeah.
So that surprises me, that people that like that is not more of a factor. I think it's probably because of schools and other issues, land, all of that. But you can see like Coconut Grove, for example, you mentioned it. It's centrally located. You can walk to so many things. You don't have to like be in your car. You can get to like all of these areas pretty quickly. I think that's part of the reason that that those neighborhoods are doing better than others.
Yeah, I agree. I think that when I look, I live just south of the Grove. I lived in the Grove first of all, then I lived in the Gables, now I live in Ponce Davis, and they're all part of the same ecosystem. But I think the housing market fundamentally has always outperformed the condo market because land is land and you can't build any more of it. And I think condos obviously get built and there's more and more of them. The supply-demand variable changes. I think that, that if I look back at the market in the last 6 months, I see those markets as pretty stable. I don't see them going down. I don't see them like flying up. Our reports that we did mid-year talk about this. We say, look, things are good. I think one of the things that we always get in everyday question is how's the market, which is like the $1 million question, which means 1,000 different answers depending on who you are. Which market, exactly, which price point, which product. But I think that within areas, I can systematically tell you that there's a much higher number of single-family home markets that have done much better this year than the condo markets. And I think that might be to do with lifestyle shifts. It might be to do with the actual product itself that's just not doing well. It might be costs. It might be just the demographic that actually buys this product is shifting a little bit. There's a lot of variables, and it changes all the time. I'm interested to see how interest rates start to move things. But one of the subjects that I'm curious to know with you, and we have the housing market, we have the condo market, but we covered the resale. This was all resale product, but the new condo product. You're reporting on a lot of the new condo product.
Yeah.
And what are the stories that what are the important things that you're reporting on in the new condo market that are part of the variable equation for success or failure, if you want to call it that?
So there's the developer building quality product that is building at cost. So they're not so they're not making a profit, which is scary. There's the developer that...
Why is that scary? I'm digging here and I kind of know the answer, but just for those who don't know, why is it scary for a developer? So it feels like I'm asking a stupid question, but I'll ask it anyway.
Because they're selling units for the price that it costs to build them. So they're not making a profit, and they're hoping that the units that are left to sell, they can make it up there, right? But that's risky because obviously you haven't sold those yet.
Yeah.
So that's not the best situation to be in. There's the ones who have been trying to get their financing for months and months and months, and are having issues or just delaying paying commissions and things like that, where you kind of are like, why aren't you paying? That makes you realize, like, do you have your books in order? Right. There's I think too, not to harp on it, but the short-term rental hotel condo product, where there's just so much. I think you're starting to see the ones that are doing well and the ones that aren't. I don't know if it's brand or it's location or developer reputation or strategy, but those are the kind of like, it's a combination of those things. And then there's also, like, to me, like the Four Seasons product is kind of a unicorn. I don't know. I feel like it is. Like, you have the Fort Partners has developed all of them or owns all of them, all the Four Seasons in South Florida. And they don't talk to the press. They don't go to market publicly. So you don't, I'm sure you have information. But...
Oh, no, I know the developer. I actually sold his own private residence, weirdly enough. So I have a great working relationship.
Maybe you can connect us.
I'll try.
Probably not. But like, that it's funny because they didn't, like the Four Seasons in Coconut Grove, they did not do like a sales launch, right?
They're actually, so stay tuned, guys. Number 60 is next week, and that's the Four Seasons.
Okay.
But they have been selling for a little bit. But yes, the sales office really opens next week, and I'll be reporting on that probably first out of the gate to get some news on that one.
But it's very exclusive.
It was a very soft launch. Right. It launched like they started launching a year ago, but it was really quiet. Almost like the Amman project. They didn't, like, everyone was like, when do I get the sales brochure? And they're like, we're not sending you anything, man. Sorry.
Right.
They didn't. I sold it in-house.
The Amman project is interesting, too, because they sold out That's in Miami Beach, next to the Fiona House. They sold out, as far as I know, very quickly.
Mm-hmm. Yeah, they did. Like no one knew about it. Like they didn't tell anybody.
Right.
They just brought it into the market, and that was that. It came out, and before we were known, it was like it's gone. And I was like, "Is there anything available?" And they're like, "We sold it."
Right.
Felt almost overnight.
Right, and the construction just went vertical.
Yeah.
Like 3 years later.
Yeah. But so. Yeah, those you're talking about success stories. So the buildings that like the Four Seasons, the success stories. It's interesting because there's a formula for that. I mean, again, I know we've talked a lot about the stuff that doesn't work. You were saying, okay, there's the Four Seasons, but you're almost suggesting that they're using that as the poster child.
I think that is one of the more successful examples.
Yeah.
And then the reason I mentioned the Aman is because I'm curious, like when you sold something 3-4 years ago at $5,000 a foot, at today, how much do you think that would sell for?
So the Four Seasons, for example, this is me being a nerd. The Four Seasons record this year was $6,700 a square foot for the penthouse. There was another one around $6,100 a square foot, and then there was about 5 or 6 of them that were somewhere between around $5,000 and $5,500 a square foot.
Right.
And that's like a really, really high number. And I'm not saying it's the only building that does that. You can go to Fisher Island. You'll see examples there that hit that numbers. And you can also get close with some other product that gets high. There has been some other successful product that's kind of shocked me of like, wow, that got crazy. Like Park Grove got $3,600 a square foot for a unit.
Right.
That actually my wife did the interiors for that. So it really looked wow. But that one, giving Design Solutions a plug here, by the way, if you want a great interior designer, that one set records. That one absolutely killed it. And I think that one originally, I sold that unit first time round, and I want to say he paid $1,400 a square foot for it at the time.
Yeah.
And then sold it maybe even less. Yeah, maybe even less than that, maybe $1,300 a square foot, and then sold it for like 2.5, 3x.
Yeah.
Wild.
Yeah, I think also like it is a slow market now. I don't know if you agree.
It's a slow. I think it's just like a schism by fabrication market. That's the right term. Like it's got different markets doing different things. And I think some markets are slow. I think other markets just ticking along nicely.
Exactly. Yeah.
I actually find that some of the like Coconut Grove, for example, there's 3 new construction sales for every one resale that's going on right now. And if you look at the buildings that are running through Coconut Grove, you've got the Well, you've got the Four Seasons now, which is quietly selling, but it's selling. Then you've got there's the Ziggurat, there's the Lincoln, there's Arbor. Some I like, some I don't like, quite honestly. But the Well, for example, the Well's over 40% sold, and it's all locals. It's almost all. I know this because I'm one of the sales directors, and I'm not giving a shameless plug here, although I am giving a shameless plug. It shocked me because almost everyone through the door has come from like Pinecrest, Coral Gables, Coconut Grove, and they don't want the big house anymore. They want the condo, but they don't want to leave the area. They love living in the neighborhood.
That's a great location.
Like the Grove is such a cool neighborhood to live. It's so awesome. It's got like this cool, relaxed vibe. It doesn't have lots of tourists. You've got nice restaurants. It feels locally. There's lots of great things to do. It's really green and naturally beautiful. It doesn't feel like it's been like bastardized, and like it's surrounded by lots and lots of buildings, so it gets cold. The marina's pretty. It's just a pretty neighborhood, just an all-round nice place to live. And I think that there are a few pockets like that in South Florida. Not as many as I would like, though. Mm-hmm. I think there's a lot of areas that are promoted as amazing and cool, or the next thing. Like that's the promises of the renderings. Like we were going back to earlier the conversation about, the clever marketing, or like really beautiful videos and images that show what a neighborhood looks like in the mind of the developer. And then when you get there, you're like, it doesn't look anything like this. There's like this shed next to the building, and there's other ugly building, and there's another big ugly building here, and then there's like a busy street in front, and there's like 1,000 cars going by every day. But when I look in the video or the picture, it's like this shining, ethereal building, and there's nothing but like beautiful rainforest around you.
Right.
I'm like, it looks like the coast of Brazil in the building. That to me is like, I have a real problem with that.
Yeah. Yeah.
There's a real problem with that.
There's a lot of that.
Yeah.
Yeah. Where you have the tower, and then there's just like greenery, and the sand is
like crystal blue.
Yeah.
And it's not. It's like murky. And I mean, like and we're not trying to paint it like we live in South Florida. I'm not trying to paint a picture of like Miami being a bad place, because as you said to me, I'm surprised that a realtor would then come and give me what could be construed as negative press. I'm not doing that because I wanted to give you honest press. I wanted to give you an honest story, because there's lots to be really positive about.
Mm-hmm.
I mean, if it was all bad, and the whole market was just crap from like A to Z, north to south, east to west, then I'd probably be like, this isn't going to be very good for my career. I'm going to like shoot myself in the foot and not sell anything.
Right.
Or I just would stop selling real estate and find another job, because I would have a real hard time BSing people. But there is a lot to be like positive about. There's a lot of really good products, not just the Four Seasons. Actually, there's a lot of great resale buildings. You know, lots of buildings that I think are. 87 Park's a great building. There's bits of Oceana I love. There's Fendi is a great building. Continuum's a great building. Verona Portofino is a great building. Apogee is a great building. Bunch of buildings on Fisher Island that I love. I like the Four Seasons in Brickell. I think that's still a great building.
Great.
I think the Mandarin going up's a phenomenal building. I like the St. Regis in Brickell, where that is. I like Park Grove. I like units at Grove at Grand Bay. There's like lots of stuff that I think is really great. So I don't feel like it's terrible to say when some stuff doesn't hit the mark.
For sure. And also, like, this is the time when there's so much supply, it's a little slower, where you can see which ones are better, which ones are not, you know?
Yeah, absolutely. What are you getting ready? Because again, getting a temperature gauge for the rest of 2025 and 2026. What are you reporting on like right now? What are you starting to report on to get into that is going to be something that we might want to start paying attention to, that we can start having dialogue over, and I can start, again, those people watching might be like, all right, those are some good questions to ask.
Mm-hmm.
Like, as everyone says, what's the right questions to ask right now?
Well, there are. I'm looking at like which projects are on hold or stalled or may be about to be put on hold. What else?
That's quite a big one, though. I mean,
yeah,
it was stalling on hold by the fact that they haven't got their financing yet.
Financing could be costs, construction costs. Maybe.
There are some. I'm like, I won't say, we won't say online because we don't want to get sued. But there are some ones that when I heard the news, I was like, that building hasn't paid commissions. That building hasn't done anything yet. They've just like pushed some dirt around. That one didn't even get their financing. They said they did, but they actually didn't. This is like a lot of BS.
The fake groundbreakings.
Like this stuff. This is what you're getting into right now.
Yeah. So I spoke with a developer of a small project in Brickell, and I had been hearing different things about it. They had a groundbreaking, but they hadn't started construction, all of that. And I remember when I called him and I spoke with him, he said, if you had called me a month ago, it would have been a completely different story. I think he turned it around or something. So it's kind of interesting because you really it depends on whether they can hang on, you know?
Yeah. If they can hang on to the deal and not get to a position where they just have to give it up and fold. Because there are projects where they don't sell enough, or they don't have the finances in place, and then they just have to fold up shop and total off and do something else. And then someone maybe come in and save and buy the project. Yeah,
and there could be a project where its sales have been slow, but the developer has owned the land for a long time, maybe has no debt on it, and can hang on. So it's like, it really, I mean, we're looking at the ones where where they need financing, or their costs are out of control, or they're not selling as well as they wanted to, things like that.
Yeah, it's going to be interesting to see how 2026 is going to shake out.
Yeah.
And we're going to be, I love the fact that we can have honest dialogue, and I'll stay close to you and you'll stay close to me. And I know that very often this is a weird kind of like odd couple relationship to have, where you have a realtor and a real estate reporter talking to each other. Because when you first came on the last time, we talked about it was the article about the sinking buildings in Miami, and everyone was like, you're going to do what? Like, you're going to interview this lady about about this sinking, but that can't be good for you. And I'm like, well, it's not going to make the problem go away, is it?
Right.
Like, we just have to talk about it, and we have to understand it, And then I spent time, I actually read that whole, there was like a 36-page report. And I'm not a geologist or a, engineer or environmental scientist, but I was like, let me try and at least make sense of this. And we had a good conversation over it. And I think it was warranted. And I know that on some parts people get press out and they go, well, it's just the newspaper's trying to sell stuff. And,
yeah, that's what people want to read. I mean,
yeah, don't shoot the messenger. But it's better that you say something than nothing at all.
What kind of feedback did you get after you published the report, but then also after my article came out?
So when the article came out, I was actually in Dallas. I was at an event. I was at there's a real estate coach called Tom Ferry, and I was at the event with 3 of my new team members, and it came out, and everyone was like, "Oh, do you see that?" And I was round. There was a lot of realtors around me. They're like, "Oh, do you see that article? That article came out, and it's all about your report." And then I was like, "What are the responses? What are people saying?" And they were like, "Well, one person said they just dismissed it. Another person said, well, and then there was a lot of other stuff." Then I actually got a call from a few developers, but it wasn't negative. It was like, "I'd like to pick your brains." It was actually really positive. It was like, I'd like to talk to you. I'd like to understand where this comes from. I'd like to understand how you're weighing this up, because I'm just trying to be a sounding board to the market. I'm trying to be a sounding board to what the consumers want. And I think my entire career, if I can like summarize anything about what we're trying to do, is that I really hope that people will see that I'm just trying to get good feedback from a market for what they want to know and understand and hear about. I take that information and then I actually want to share it with the developers. I want to tell them, hey, look, whatever you're going to develop next, whatever you're going to build next, for what it's worth, this is the conversations that I'm having with my market, and then it will help them build a better product, maybe market better, or maybe communicate better.
Right.
Because I think that the market does need better communication. I think I mean my honest communication. Just not like trying to avoid a question or trying to poo-poo it and say, well, that's just nonsense, I'm going to ignore it. I think it's good to say, you know what, all right, clearly this is a problem, or it's a problem to some people. Well, let's talk about it. And then that will we'll see better buildings. And one of the things that I wanted to almost like we skirt around a little bit was branding, was the whole branded buildings situation where everything gets branded, nothing's branded at all. Right. And I feel like the problem that you get is if you get a lot of like bad behavior, a lot of bad noise coming out because products maybe not what the market wants, let's call it like that, then you really need to address it and you need to be honest. And I think that the market amnesia that we suffer, and we do suffer from market amnesia. I mean, you raise the point that people seem to forget really, really quickly. Like something bad happens and then people forget about it because there's always something also bad going to happen the following day and the day after that. And so people forget. And then through a cycle, you'll see the same person do the same bad behavior, build the same bad product. But before they do that, tell everyone that it was amazing and everyone loved their first building and it was incredible and it was just an overnight success. And it wasn't. It was anything but. There was lawsuits aplenty. There were people who were screaming because they discovered their unit had a column in it that they didn't expect it would have, or that the finishes were really bad and the door wasn't hung properly. And it was just denying that doesn't make it go away. But I think if people don't report on it, it kind of does go away. And I felt like it was good to have that conversation, and I want to continue to have that conversation. And I just want to be able to talk to the people who are building the product. And I'm really lucky that I have some great developers that I work with and I talk to.
Right.
I feel happy that I get to have conversations with people like David Martin, and I tell him, he'll be, what do you think about this? And I'll be like, I'll tell you honestly what I think about this. And it's great. He listens. I mean, he gets it. And other people, those who don't, who say, well, I just want to ignore that, caveat emptor.
Mm-hmm.
You know?
Yeah, definitely.
So, yeah, that's it. I think this has been a really good chance for us to have a really honest conversation. I hope that those watching this podcast have felt this as an honest conversation. It's certainly an ever-evolving one. I don't want to say that the list this year is going to be the same next year or the year after that. I certainly don't want to say that it's the it's the short list. There's a longer list if you want me to give you one. At the same time, if you want me to give you some positive, optionality, I'll do that too. And I'll also talk about the other products as well. I just did another podcast video where we talked about, the biggest mistakes that you can make in the housing market. Because trust me, like nothing is immune from bad builds,
right,
or negative economic forces. Katherine,
thank you so much.
thank you for watching.
Yeah.
As always, audience, thank you for watching. Hope you enjoyed this. See your information below, and I promise you will keep getting direct, good, honest, actionable, and quantifiable information from me from here on for as long as I do this. Stay tuned soon for another Better Decisions podcast.